What's up, everyone? Welcome to Money Market Truth. I am Mark.
And I'm Mo.
So today we have a guest on this channel. Now, if you guys are brand new to our channel, make sure you subscribe, like, and share this video at the end if you enjoy it. But this show is a 50-50 partnership. This isn't my show. This isn't Mo's show. This is our show. And Mo wants to bring on this special guest. It's special to him. It's not very special to me. I actually have my wine right here because I will have to drink to get through this show because of this guest. Now, if you guys are unfamiliar with him, this guy, literally, he's retired. He has his own YouTube channel called Tim's Tidbit. He's literally streaming every day, like 10 times, because he doesn't have a job. He doesn't have much going on. So he's always on there. And I try to support the guy. I pop in onto his live streams every once in a while, and he always disrespects me. So I think it was my opportunity this time to disrespect him because he's on our show. But again, this was Mo's idea, not mine. So ladies and gentlemen, give a round of applause for Tim. What's going on, Tim?
Hello, Mo. How are you?
Hey, Tim. Welcome to the show, man.
Hey, what's up, y'all? What's up, Mark? What's up, Mo? I appreciate y'all for inviting the old man on.
Yeah, if you guys, I'm just joking. I love Tim. He's actually my buddy. My Apple iPhone doesn't like him, though, because every time I text him, it always changes Tim to Tom for some reason. So it's just the thing that happens. No, but Tim, man, tell people a little bit about yourself. So you have your own YouTube channel called Tim's Tidbits. You do stream, about 2 to 3 times a day. And you do exactly what?
I go live twice a day. Well, actually, I started Tim's Tidbits just to share my knowledge on the stock market, on trading and investing with close friends and families. It just started out as like 7 Zooms that I did with close friends and families. And then once I started trading, became a full-time trader. Once I retired and started trading full-time, I decided to just do Tim's Tidbits for free, just to share with the community, share my knowledge. And I go live every day. Well, once I started out going live every Sunday at 3, just sharing everything that I can think about sharing. And then once I emptied out the old Chrome Dome, then I started going live every day, Monday through Friday at 9 a.m. Eastern Standard Time, to talk about the overnight price action and what I see the market potentially doing that day. And then I go live at 6:30 p.m. Eastern Standard Time and talk about what the market did that day. Were we correct? Were we wrong? Were we far off? Were we close? Just talk about the price action, and also just try to sprinkle in like stuff about like the economic calendar, how I think it's going to affect the market that day or that week. That's pretty much what Tim T is a bit about. But I'm just a dude from Fort Lauderdale, Florida. I really don't know why anybody would listen to me, to be 100 with you.
Yep, but your YouTube has grown quite significant here since you started doing these morning sessions and the evening sessions. So
yeah, it's a couple people that be on there, but I don't do it. I don't do it to try to grow. Actually, I started doing it on IG, and the cousins and the Spider Gang, they told me, "Hey, put it on YouTube. Put it in," because I really didn't want to put it on YouTube. And then when I came across StreamYard, I found out about StreamYard from this guy that teach people how to grow their YouTube pages. And once I found out about StreamYard, where I could just go live and don't have to edit the video, that's when I started doing it on YouTube. So because, man, I'm retired, I ain't got time to be editing videos and all of that right there. So that's it. That's how it came to be.
So for people to have full transparency purposes, did you retire off of trading, or did you retire just from working your 9 to 5?
Well, actually, I'm technically unemployed. Because when I tell people I'm retired, people be like, "Oh, you retired." Matter of fact, somebody called me a scammer because they said I retired from a real job and I wasn't really making my money from the stock market, and I was a scammer, and Lex was capped because she support me. But my wife, I say I'm retired because my wife told me that she didn't marry a quitter, and I ain't never quit nothing a day in my life. So she was like, "You retiring, you deserve this." And so that's why I tell people I'm retired. I worked out there for 18 years and technically I'm unemployed. So the stock, and I tell people all the time, the stock market didn't allow me to retire. The stock market gave me the confidence to retire because I was able to replace my income with the stock market. And so when I found a way to replace my income, that's when I cut ties. Initially, funny story. Initially, Tim's Tidbits was going to be videos on YouTube about videography and photography, because that's what I was doing as a side job, as a side business when I was working. I used to shoot wedding videos and take pictures from time to time, but I primarily did wedding videos and shot like commercials for businesses. And Tim's Tidbits was gonna be like tips and how to work a camera and how to shoot video and stuff like that. I initially was doing it under the title of sine qua non. It was like a term that I learned from a doctor, and it means sine qua non means like if it's not, if it unless it's there's this, there's nothing else. That's pretty much what the term means. Like without this, there's nothing else. And I was using that title because I was teaching the basics and the fundamentals of photography and videography. Without the basics, you ain't got nothing else. That's why I was using that title. And then I was gonna do Tim's Tidbits, and then once I figured out how to trade options, trade swing trade shares and trade futures, that's when it gave me the confidence to go ahead and walk away. Like I didn't hit a home run in 2020 and stack up all this money. Me and my wife, now it's probably about 6 years ago now, me and my wife, we formulated a plan to for me to retire. And then once I retired, we have been able to like pay off our house, you know what I'm saying, from like investing and stuff like that. But we have been able to pay off our house. Prior to retiring, we had already paid off like our cars, both of our cars, stuff like that. We had a plan in place, so I didn't retire from the stock market. It just gave me the confidence to go ahead and walk away because I was able to replace my income.
Well, Tim, thanks for sharing that. That way people have an idea exactly who you are. And shameless plug, if you guys want to go on my channel, Trading with a Dummy, I have a full-fledged interview with me and Tim. I think we talk about for about 2 hours or so.
Yeah, it was long.
Oh, yeah, it was long, but you guys get to know who this guy is. Tim, aka Tom. Do you have any questions for him, Mo?
Actually, I do have a couple. So, Tim, when did you actually start trading options and futures? Like what year?
I started trading options September 2020. I started researching options around March 2020. Unbeknownst to me, that was like the perfect time to be trying to trade, but like I didn't know that because I was just fresh into the market. And then I actually started trading options September 2020. And then I started learning futures. It was like around October or November 2020. And then I went live trading futures around about February 2021.
So for someone who's brand new, they don't know anything about options or futures, and they're thinking of getting into it, apart from watching you on YouTube and following you on Instagram, what do you recommend? Where do you think they should start?
Investing in shares. Don't try to trade options and don't try to trade futures. That's why I recommend them to start, because trading options and trading futures, you got to be extremely disciplined, and you have to understand how to read the price action and understand the macroeconomics that's going to be coming down the pipeline, like every week, every month. It's like a routine of news that comes out and rocks the market every single week, every single month. If you're not up on that, if you ain't got the time to dedicate to studying that, don't try to play options, don't try to play futures, just invest into shares.
And Tim, this is an important question for me. Like every time I'm on Instagram, I think you spend at least 2 to 3 hours on Instagram Live answering people's questions. Then you go on YouTube. Mark mentioned it too. What's your drive? Like, why do you do this?
That's like something between me and God. Like I told God, whatever He allowed me to be able to provide for my family with, and not have to go clock in for somebody else, I would share the knowledge behind it with the world for free. That's why I was saying in the beginning, the funny story, Tim's Tidbits was supposed to be about teaching people how to shoot videos, because that's what I thought I was going to do. My business was called TLR Video Productions, and I thought I was going to be a videographer full time. And when I started investing and trading full time, this is what I do to provide for my family now. So that's why I share it with the world for free. That's just like people always say, you're going to get tired, you're going to charge. No, I'm not going to charge people, because that's, you know what I'm saying, that's something between me and God. I say, if as long as you bless me with a way to take care of my family, whatever I'm doing, I share it with the world for free.
That's awesome. Tim, my next question to you is like, what's your trading style? Like, would you say like you have a set system that you trade with? I know you mostly trade futures. How do you really go about trading futures?
Well, actually, I'm primarily a option swing trader. I swing trade options primarily, but I do watch the ES futures to make my options entries, because the ES futures and I only trade the SPY or the SPX. I swing trade the SPY, and every blue moon I made day trade the SPX. And for people who don't know, the SPY, the SPX, and the ES futures, they're all the S&P 500. It's just one out of futures, one is the options contracts, and one is a ETF that mimics the S&P 500, right? And so I primarily swing trade the SPY, and I watch the futures every day, because they move pretty much tick for tick. They move tick. It may be like, you know, a tick or two off, but they move tick for tick because they all the same instrument, right? And so my style of trading now, I learned how to trade futures from Jay the Trader, and I used to trade levels, because out of his course, the only thing that really resonated with me were levels, because I could kind of make it make sense, like mathematically. But since then I've adopted the only thing I trade is the stuff that is price action that I learned from ICT. It's a guy on the internet on YouTube called the Inner Circle Trader. And my one primary trade that I look for is something that I learned from him. I named it the liquidity run reversal, but it's just a fair value gap trade that I look for, and it's like certain criteria that I look for to make it be like, you know, like a A+ setup, and I try to only take it if it's an A+ setup. Every now and then I'll take it off of momentum if it's not like exactly A+, but that's all I trade. It's a fair value gap trade that I learned from ICT.
Awesome.
And I'm looking at the futures, but while I'm watching the futures, I'm placing like my option swing. I may be buying, like yesterday I bought a SPY 410 call for August 12th, but I bought it based off of a move that the ES futures made yesterday, and then I closed it out today.
That's awesome.
Well, now I see why
that the ES made today.
Yeah.
Well, now I see why people call you a fraud, because you do your show and it makes it seem like you're a ninja trader and you're trading futures, but in reality you're doing options.
Yeah, I'm cap. I'm a fraud. I don't show my P&L. I don't show live trades. I'm cap, man.
To Tim's point, even when you do supply and demand, like if you're trading indexes, you should always base the level off futures. That's how you're supposed to do it. So that's the right way of actually, if you want to be precise and accurate, that's the right way of doing it. Tim, there's an interesting thing you said. I've been doing this for 2 years, and there's one question that everyone asks, and they say, hey, at what point should I quit my job, right? To trade full-time. That's a very, very repetitive question that I get all the time. And you mentioned something, you know, you don't work, and then you got into stocks, and that gave you the confidence of walking away. If someone's listening to you right now and they're tired of their job or they don't want to work, what's one piece of advice you'd like to give them?
Make a plan, formulate a plan, and figure out if you don't have a budget right now, the first step is to start a budget. Figure out how much money is coming in, how much money is going out to expenses, aka bills, how much money is going into savings, how much money is going into investing, right? Once you figure all of that out, right, that's going to tell you where all your money is going. Hopefully you're in a surplus, either in a surplus budget or a balanced budget. Hopefully you're not in the deficit. Surplus budget mean you got extra money left over that's not doing anything. Balanced budget mean all your money is doing something, and in a deficit mean that you don't have enough money to take care of the expenses that you have, right? So if you're in a balanced or a surplus budget, then start to figure out where can you start to cut down expenses. For example, me and my wife, we figured out we were spending $278 a month for our cable phone and internet package. Here in Georgia, you can get cable phone and internet, right? All in one, but you get your cable phone and internet from the cable company, right? So we figured out, okay, we spending $278 on cable phone and internet, and we don't watch TV that much, right? We got like the best and greatest phone service that we don't use. We never use our phone. It rings all the time, but we never use it, right? So what we did, we turned off the cable, right? And then we got the most basic phone, just anything that's just barely on, because we just need it for our alarm system, right? Anything, the cheapest thing just to have it on, right? And then we actually upgraded the internet, and we went from paying $278 a month to paying like $65 a month. And that was one way we was able to cut some money back. So start looking at stuff like that, like what can I scale back? And once you start scaling that back, right, figure out your number. What I'll do, I'll give y'all a link to put in the description of something for, I got a it's Discipline Over Dollars. It's like some some slides, and it walk you through how to find your number for retirement. Shout out my financial advisor Dustin and Eric from Jazz Wealth. Dustin came on Tim's Tidbit, and he showed me exactly how to find your number that you need for retirement, right? If you go to that download the slides on for Discipline Over Dollars, you will see how to do it. It show you how to go to the website to see what you're gonna be getting in retirement, and you can go to another website to show you how to figure out how much you need to invest right now to plan for your retirement. Figure out your exact number, right? Once you know your exact number, start to save toward that exact number. Figure out how much money you need to save, you know what I'm saying, on a regular basis to hit that number. Once you got that number, then that's going to tell you how much money you're going to need to be bringing in once you leave your job, right? Once you got that number, once you got your budget in place, once you understand that, once you done cut the corners you need to cut and all of that right there, then start figuring out, what am I going to do to replace my income? Is it going to be investing? Is it going to be trading? Is it going to be, figure out what it is? If you want to be a trader, then it's time to start. Now is the time, while you working, is the time to start learning how to be a disciplined trader, right? Don't look for home runs. Don't try to get out there and make the stock market retire you, right? Right, figure out your plan, write your plan out, start executing your plan now, and then start working on your skills to be a trader, start working on your skills to be an investor. Whatever you need to do, figure out how to be a very disciplined trader or investor. And then once you get to the point where you're able to replace your income with the stock market, then start to say, okay, maybe it's time to walk away now. But don't look for that home run. Treat the stock market just like you treat your job. You go to your job every single day with the intention of retiring in 30 years, you know, but people want to get in the stock market and retire in 6 months. You can't do that. I know that was a long-winded answer, but that's just how I feel about it.
No, man, people need to hear this stuff, because, you know, everything on social media is, I quit my job in 3 months by doing this. You can do too. Join this program. All the bullshit trying to sell you dreams. What you really said was, you know, set realistic expectation, and in your mind, think about cutting back. No one really thinks about that. When I had my interview with Mark, same thing. I said, I told my wife that I'm going to quit my job. This means all the shit that we're doing, we can't do anymore. And until we're okay with that, I can't quit.
Mm-hmm.
Yep. And this is a realistic situation, because like Tim and I, by the way, shout out to Jazz Wealth. He's also my financial advisor. Very good. financial management group. But everything Tim said is the reality of what you may not see on Instagram. Like we just spoke about that. A lot of people want to sell you a dream, and what you're not realizing is that dream that they're selling you, you're actually paying for their retirement. The reason why Tim was able to retire early or quit his job is because he lowered his expenses. The reason why I was able to walk away from my career was because we lowered our expenses. Like Tim doesn't have to work and doesn't want to work. I just went back to work recently because I wanted to and just live a little bit more comfortable, because we are able to live off of the paycheck and the retirement, everything that I have, but I want to be able to spend money a little bit loosely until I become a full-time trader. So I don't have the skills yet at Tim's level, I guess. I never really asked you if you are making a full-time income on a consistent basis as a trader. Are you?
Yeah, I was able to replace my income. Like I didn't leave until I learned how to replace my income.
Okay.
I initially started out with trying to, I was bringing on my job, I was bringing home, like $2,100 every 2 weeks. Well, twice a month. I was bringing home, my wife get paid every 2 weeks, but twice a month, I was bringing home roughly $2,100 twice a month. When I got to the point where I could bring in more than $2,100 twice a month consistently, that's when I was comfortable with like retiring. And then I started kicking the can down the road, and she was like, stick to the plan, because it's like, I'm a worrier. You know what I'm saying? I'm a worrier. I'm like, what if I can't keep this up? What if I can't, I'm a worrier. So it's like, once I got to the point where I can consistently make more than what I was bringing in, you know what I'm saying, without a shadow of a doubt, that's when I was okay with going ahead and doing it. So
okay, yeah. See, so I'm not there yet. I mean, I was doing fine for 6 months when I was like out of a job and just like retired, but I felt like I wasn't consistent enough where I had the same paycheck coming in every single month. It would fluctuate significantly, and I didn't like that. And it just made me nervous. I didn't like it. I like the fact that I can go to a job that's really easy and chill. And that's another thing. Like, I don't hate my job. A lot of people hate their jobs. So if you are in that situation, I would recommend finding a different job or a skill that can provide you a more comfortable job, potentially working from home, that pays you the same while you learn to become a trader. I just think a lot of people make the mistake of quitting their job and automatically thinking they're going to be a successful trader overnight. And it's a lot of work. It is hard. I think every single person I've spoken to who is a successful trader, including Mo, will tell you it's not easy. It is hard. It is hard. We're not selling you a dream. It is hard. So, yeah, that's all. That's all I got.
That's why I said don't do it. That the first thing when I think the first question Mo asked me was like, what if and I was like, don't do it. Don't do it. It's not sexy like they make it look on Instagram. It's quite boring if you're doing it correctly. And it's very stressful if you're not doing it correctly. You know what I'm saying? Like if you're trying to hit home runs, it's very stressful. If like me, I understand that I've figured out, because like most of 2021, after I retired, I was a full-time day trader. I was a day trader. I'm looking for trades every day. And it got to be so stressful. And I started making ridiculous mistakes. People ask me, what got you so disciplined? And I said, losing $14,000 in one day and having to tell my wife that I just lost $14,000 in one day. That's what got me so disciplined. Won't nothing get you disciplined like losing a nice chunk of money, right? It won't. Matter of fact, I just shared that story with a group of kids, and I told them, I said, if it had not been for Ninja Trader kicking me out of that trade, because the 14,000 was spread between options and futures. If Ninja Trader would not have closed my trade because I didn't have enough initial margin, right, to hold that many contracts, I would have bled. I would have lost $75,000 a day. I already know I would have, because I wouldn't stop. I would not. I was going to prove the market wrong. It would have just exhausted my entire Ninja trading account. But when it kicked me out, it just kicked me out at where I was down at. it kicked me out because I was once I tried to put on that last contract, it said, oh, you ain't got enough margin for this. Get out of here. And it closed the trade, and I was down like $8,400 in the trade. But if it would have just let me keep going, I would have taken it. I would have lost $75,000 that day and blew my account. You know what I'm saying? And then once I just gave up on that, I was like, let me go close this other options position and see what I lost there. And the grand total was like a little over 14,000 between the futures and the options. That day is what made me disciplined. That day is when I started listening to those books. I started listening to Trading in a Zone. I started listening to books like Trading in the Zone, The Mental Game of Trading, Investing Wizards or something like that. Market Wizards. That one ain't really my favorite, but I listened to that before. You know, so I started listening to books like that. But Trading in the Zone that day taught me my lesson. And then The Mental Game of Trading is what really made me sit down and do the work to understand me. But yeah, I ain't want to lose no money like that no more. That's what being a day trader without the proper skill will get you.
I have not experienced that, and hope to God I don't. So, because I don't know if I will continue or not. I don't know, honestly. I will say no. I'll probably continue, but
I didn't. You know why I kept going? Because when I told my wife, she said, "You know what you need to do?" I said, "What I need to do?" She said, "You need to." She said, "You need to get on. You need to get on S2F right now." That's when I was in S2F. She said, "You need to get on S2F right now and share with the cousins what just happened with you, so they'll know people can lose." And I was like, man, I'm being embarrassed. She was like, you need to get on there and share that with them. They need to hear this. And I got on there and I shared it with them. Everybody was like, man, I appreciate this, man. I appreciate that. And her telling me to stick with it. And that was her way of telling me to stick with it. You know what I'm saying? Her telling me to stick with it and hearing the other cousins like, man, I appreciate you for sharing this, man. People start saying, man, I ain't think other people in here actually lost. I ain't never hear nobody talking about they losing money or nothing. So that's what like kind of gave me the confidence to keep going. Like, you know what I'm saying? Like, man, I helped somebody with this sad story. That helped somebody. And then that really, you know what I'm saying, motivated me to keep going. And then I got disciplined. And now it's easier for me now because I have a platform. It started out as a weight on my shoulders. Like I felt like I couldn't let these people down, but that weight on my shoulders turned out to be exactly what I needed. And it forced me to become extremely disciplined because it started out not wanting to let my wife down no more, not wanting to let the Spider Gang down. But it turned out to be exactly what I needed to make me become like laser focused and disciplined. I still lose trades. I lost a trade yesterday that I was talking about that. You know what I'm saying? I was up 12 points on the MES and went to go take my son to football practice and came back and got stopped out 8 points down. I still lose trades, but it's like I have risk management in place now. I'm like super disciplined now. I don't know. I went somewhere. I be all over the place, man. Y'all got to ring me in.
no, you're good. You're good, man. You're good. So, you got anything else, Mo? Any other questions for him?
No, I'm good.
All right, perfect. Thanks, Tim. So we're gonna go over the hot takes for today. Are y'all ready? So we can get your input too on this. So Be prepared, Tim. All right.
I'm here.
So the first topic is the HKD, ticker symbol HKD. I'm sure you guys have already heard about this. It's AMTD Digital Inc. That sucker ran like crazy the other day. It ran nearly, I believe they said it was around 2,300% in a single day, 2,100 or 2,300% in a single day. And they're saying that the meme stocks are back again. This came out of the blue. I don't even really know much about this company. I just kept hearing about on the news, and obviously after hours is already down 34%. So $579 already shaved off, but it was literally $2,200 the other day. What are you guys' thoughts on this? Do you guys think that the meme stocks are back again?
So the opening price for this stock was $16. The high of the stock was $2,500. This is
crazy.
One of the reasons why this thing ran so much is The total amount of shares you can short on this bad boy was 16 shares. So that's what's going on with this. Yeah, meme stocks are back. You will look at Tilray and all that. They've been running, but also note what happens after meme stocks run. What's the next phase? It's usually a big correction. This is the fourth time I've seen that. So we'll get into that later, but it's crazy, man. People are going crazy right now with all the other meme stocks, hoping it will do this kind of move. And it brings me back to what Tim said. Don't chase a home run. This is exactly what people are going to do and end up losing money.
So, Tim, have you heard about this one?
I actually, the only reason why I heard about this, because I like during the day while I'm watching the market, I watch a show called, I think it's called like Day Trade the World. It's some guys out of Canada, but I just watch them every day, and I hear them talking about this stock because people be putting it in the chat like HKD, and they they be looking at all different kinds of stock because they day trade shares. And so that's the only reason this stock was even on my radar. But as far as meme stocks, I don't even get caught up. I don't get caught up in the hype of meme stocks. I personally, I only trade the market. I only trade the S&P 500. Every now and then I will swing trade the NASDAQ via options on QQQ. But I only trade, I focus on the market. I'm in the mindset of like slow and steady. And the market may not give me like the parabolic gains like a meme stock or like a Tesla when it's running or whatever, but I know how it's going to move methodical. It's going to respect the price action, and so that's why I just stick to the market. If every hedge fund manager trying to beat the market, I'm just gonna ride with the market. That's I don't pay attention to the meme stuff. I try not to give it any attention.
Yeah, and I want everyone to be really careful with this, especially if you're an investor. This is not a stock to invest into. I'll repeat, this is not a stock to invest into. If you're a trader, be very cautious because again, $12 to $2,500. To me, I think this is a trap. I think hedge funds who invest into this, I know they say that this started on Wall Street bets. I really doubt that retail investors can bring the price up like this to the point where it went to $2,500 in a single day. So I think this is going to be a rug pull. Be very, very, very careful. I've been in groups and seeing YouTube videos where people will sit there and rave and say, this is the next best thing. You should invest into this and etc. Be careful. Be very, very careful. They even stopped this, like these types of stocks, because they're so volatile, they will get stopped in mid-trade. I've done this before with one of the meme stock. It was the DWAC. It was the one that Trump was bragging about, that this new social media platform. I got into it and I had difficulties getting out. Luckily, I still made like crazy amount, like 300% or something like that on, I don't remember exactly what it was, but it was definitely over 100% off of shares alone. So just be very, very careful when it comes to these meme stocks. All right. Yeah. Same thing with AMC, same thing with GameStop. There is no real fundamentals for these type of plays. It's really gambling. That's really what it is. You're gambling. You guys have anything else to touch on?
I was gonna say, like, if you said it went from 12 to 2,500 in one day.
Yep.
That thing
right? Wasn't it one day? No, I'm sorry. It was $12 and went to like $40 for a while, and that's where it ended up jumping off, I believe, all the way to $2,500.
Well,
it did that in 2 weeks.
Oh, in 2 weeks. So they must be, this thing got to be getting halted like every 15 minutes. Like,
yeah,
like you said, like when you got into DWAC or whatever, like that's what the you get caught in a halt. It's like it get caught in what I think what is it, like SRP or SR something. I don't know what it's called, but it'd be like they halted for like 10 or 15 minutes, and then once they halted, you may get snowed because it may gap up or gap down, or it may do something crazy. And like you say, you trying to get out, but you can't because it's halted. And then when it come back, if you know what I'm saying, if it go against you, you sitting there looking like boo-boo the fool.
Like crazy.
I just stay away from that stuff.
Yeah, I mean, because I think it actually it went public, I think 2 weeks ago. But if you look right here, it was on August 1st. It was what was it? was like $432, and it just jumped up in like one day to $2,500. It was crazy. Regardless, this was insane, crazy. I would be extremely careful. I'm not going to touch it. I'm sure there's going to be a story about this eventually, just like GameStop. But I wouldn't touch this. So on to the next hot take is Mo's favorite, Siga. So it has ran since the last time we spoke about this last week, which is a stock that's related to monkeypox. We had a comment in our Money Market Truth podcast on the bottom, and someone commented and said that they got a option play for $17 call. Congratulations, you did well. It's up. Mo, I know you've been trading it as well. You want to touch on that a little bit?
Yeah, so basically we covered Siga, and the reason why we did was, we trade news, we trade flow. If you look at the option chain, we went over it. It had about 98% call, and it had 2 puts. The call that we looked at was the $25 August 19th. For that day, it was 60 cents. The high of the day for the premium was $2.40. So it did move up quite a bit. So about 400 to 600%, depending on how long you held it for. The reason why we're mentioning it is not because, we called it here. It's more so, how do you replicate that, and how can you do that yourself? The first thing is flow. The second thing is being a little bit early than the rest of the people. So I got back into this play again. So I'm in the September 25 calls now. I got in when it dropped. So basically they had some issues with FDA approval, which always happens. Any kind of vaccine, that's if you believe in it, that's your opportunity to get in. So I got into September 25s. I think this thing has a potential to going upwards $40. But again, the way you do this is you manage your risk, because these stocks are highly volatile. Tomorrow something else can happen, and some other company could say, hey, I have pills that could take care of this. Or for a month, monkeypox is done and your options go to 0. So what you do is, I added the stocks on these things at 12, sold half at 22, made some money on options, covered my profit. The end game with options is preserving your capital. You only do that by making the trade free. That's the only thing that's certain. How much money you're going to make is not certain. That's not up to you. That's up to the market. So making the trade free is all we do, and because that's all we can control. The other thing you can control is how much you're going to lose. That's it. That's the only thing we can control. But we'll go over what other plays we have for you today. But Siga did amazingly well. I think it's got a lot of potential still.
So you don't think it's too late? You think there's still plenty of room for it to move?
Yeah.
Interesting. Tim, did you play this at all?
No. I only trade the SPY.
He's like, that's all I care about. Don't ask me about anything else.
I only trade the SPY. If it's a stock that's within the top 7 of the SPY, then I'm paying attention to it. Other than that, the rest of it is just noise. Because the market movers are in the SPY. You know what I'm saying? The market movers are in the SPY. The big dogs are in the SPY. So, just like I told people back in December, you know what I'm saying, to check out energy, even though I don't trade energy went on a tear. Energy been tearing for the first 6 months we was dropping. Energy was tearing, but the market was still dropping because the market movers were dropping. So I just trade the SPY. I don't pay attention to no other individual stocks outside of like the top 6 of the SPY.
Yeah, that's the level of discipline. So not everybody can do what Mo does, because I can't vouch for him 100%. I literally sat next to him. He does trade for real. Even in his Discord group, he's actually trading. But it's the skill that you have to acquire. He's very good at it. Like you see, Tim is very disciplined. He only does SPY. So be careful. That's basically it. Just be careful with this one. Mo thinks there's still some upside to it. I probably will not indulge in it. So I'm trying to be a lot more disciplined. I haven't even really traded in the past 2 months. I'm getting back into it this week. I've been paper trading just to refresh. And then I'll jump into the next one. So our next hot take is on a somewhat public figure. So just to give you guys a big background, a big picture background, it's Mark Monroe. Mark Monroe was a VC. He's very wealthy, very smart dude. He created this group called the Come Up Series, where he introduced a lot of people to Leap options. So he has a pretty big following. He tweeted this today, and it kind of went somewhat viral within the community. It says companies are already out of the bear market territory and preparing to leave out of the correction territory as well. It might be crazy, but now you've seen how stocks move and why people buy at a low. Tesla and others were down by more than 35% a few months ago. So just quickly, again, to give you a little bit of a background who this person is, he does everything for free. He's an options trader, but he made his wealth being a VC. I know Mark. I consider him a friend. We talk consistently. I'm pretty sure he considers me a friend. Just to give a little bit more context on this, I did call him and talk to him about this tweet. He did mention that the reason why he is leaning towards what he said is because he feels like Apple is a catalyst for Dow and the S&P to move up, and seeing that Apple is now out of correction territory and bear market territory, which it is, that he believes that the market will start swinging to the upside. Now, by no means is he saying he doesn't think it's going to come back down for a quick correction, but he thinks that we're on the upside. And so one thing I've also noticed with people who have a huge following like Mark Monroe, there's a lot of people who will do whatever he says in the context of investing and trading, right? I don't know why people do this. They're looking for a savior. I'm not sure. But like I said, he has got a huge following. I'm not that type of person. I used to be a year and a half ago, not with Mark, but some other people. I just listened to everything they said, and I made my moves based on that. And that's really not a good quality to have. So I've come up with my own thesis on certain things, my own feelings, my own research, and then I determine that on how I'm going to move moving forward. That being said, Tim, what's your thoughts on that, man? Do you think that his statement is accurate there?
Let me read it again, because this is my first time seeing it. All right, companies already out of bear market territory. I can agree with that. We got like the big boys with all the big boys are out of bear market territory. Just to say we're still in a bear market until we get at least 20% off the lows. It's still officially considered a bear market. And I think we're at about maybe I think we was around 15% off the lows. I think, I'm not sure, but we're still in a bear market, but we have companies that are out of bear market territory, like the big boys. Most companies, I was going through looking today, and I got up to like maybe 20 companies in the S&P that was still in bear market territory, heavy, like Meta, and a few other ones. Meta is like probably the biggest one that I can remember that's still in bear market territory. Every other company that's still in bear market territory is smaller market cap wise than Meta. So the big boys, Apple, Tesla, Amazon, Google, Berkshire Hathaway, I don't even think they hit bear market. They may have, but the big boys, United Health Group is positive on the year, but United Healthcare, should I say? Yes, a lot of companies out of bear market territory, and the movers like Apple. Apple is moving a little bit faster than the other big boys. That's the only thing that concerns me about it, is because when the big boys start not moving in tandem, the market starts to kind of go sideways. So, yes, we got companies coming out of bear market, but right now, I think it's a little misleading to say that that statement can like kind of make it seem like, because people don't read everything. People ignore the fact that, you might say it's not going to all-time highs. They only hear what they want to hear. And so it's like, I just stick to the point of we still in bear market territory, and let the market show you when it's ready to not be in bear market. When the SPY break above, I think 434, I think I got it marked on my chart. Let me look on my chart real quick.
I think that sounds about right.
When the SPY break above 434, then I'll start using words like out of bear market territory. Because when you start using those words, 434.60. When you start using those terms, people only hear what they want to hear. So I agree with him, but I think it's like a little slightly misleading kind of, because people only hear what they want to hear. That's the only, like, I'm not saying he's trying to mislead people, but people only hear what they only hear. Like, you have people that only hear the good and people that only hear the bad, and the market has been through so much bad, people only going to hear the good. And you may have people start going headlong into it, say, oh, Mark said Apple fund to bring us out of it, let's go buy Apple right now. And it ain't time to buy Apple right now. Apple been ripping. You need Apple to pull back before you buy it.
Yeah. So just to give you guys a context here, the market from all-time high at that point, it dropped. I marked this on the calendar. I'm not a calendar, on the trading view. It dropped nearly 25. And then within 1 month, it jumped up over 14% in a single month. To me, that's scary. Again, we've been 7 months into this year. Out of those 7 months, we've only had really 2 positive months. I count this one as a bad month, regardless. It was kind of, break even. So I'm very nervous on how quickly this market moved up to the point that I'm actually not planning on buying anything right now. It made me very nervous. So in regards to what Mark said, no, I don't agree with him on this. Me and him don't always agree on everything. That's the thing. Like, again, I consider him a friend. I tell him, hey, man, I don't agree with certain things. Him and I went back and forth on Intel quite a bit. My sentiments obviously changed on Intel once the earnings came out. But I do not believe that we are out of bear market territory. And I am honestly somewhat nervous on the way the market has been moving and how aggressively it's been moving. I even have a list that I made over a year ago called a dummy list on my Think or Swim platform. And I put a bunch of growth stocks on there because I knew that when the market does dip, the growth stocks are always the very first ones to get hit pretty bad. And if you look, most of them are down, what was like 70 to 80%. But this is the list just to give you guys an idea. Pinterest, Neo, Beyond Meat, Palantir, Zillow, Alibaba, Tattoo Chef, Honest, Zoom, ARKK, DocuSign, Peloton, Matterport, DraftKings, Affirm, and Upstart. Today, almost every single one of them was at least 4 to 10% up. And they're going to be the first ones as well. I'm sure once we do drop down, they're going to be the first ones to drop down significantly. It just makes me nervous seeing how all of these stocks, which I consider shit stocks, have been going up like crazy this past month. I think it's creating a sense of FOMO. Like, am I missing out on things? We have said it multiple times here on this channel, at least I have, that I think Tesla's going to 550. And now it's over 900. Now, I do feel a little bit bad because if you guys are watching and listening and taking our guidance, you may not have bought it when it dropped to the low 600s. So my bad. You could have made $250+ off of it. I still think that Tesla's going to go to 550 either by the end of this year or next year. But this market's crazy.
I got a stop loss in my mama account on Tesla right now to get me out for the next pullback.
Yeah, just this whole market just makes me really, really nervous on the way it's reacting. People are saying this is a bull run. Some people are saying this is a bear trap. So what's your thoughts, Mo? Because you're a day-to-day trader. Every day you're in the market. What's your thoughts on this?
So in my opinion, this is the biggest bull trap we've ever seen. And there has to be people who think this is a bull market for this to work. If all of us thought that this is a bear market would be in balance. We'd all agree, right? We wouldn't get the fluctuation. So you always have to have people on different sides. As much as we do have position bias. Now, we're not remotely out of the bear market. So I disagree with the statement. You need to ask yourself, well, what the hell? Why are we rallying? There's a couple of things. First thing is Fed increase the interest rate by 75 basis points. That was already priced in. We were thinking we'd do it by 100 basis points. So people took their hedges off, caused a gamma rally. Another thing that I haven't really talked about it, and I'll talk about with this platform. So if I'm a fund, okay, how do you gauge my performance if I'm successful or not, Mark or Tim? How do you gauge a fund's performance at the end of the year if they did good or not?
By your returns.
What do you compare it to though?
The S&P 500.
S&P 500.
So S&P 500 is up 14%, correct, for the year. However, funds are down. So what do you think the funds are going to do?
No, it's not up for 14% for the year. It just jumped up 14%.
I get that, but it was negative, right? So,
Yeah.
so for 6 months, the S&P has been down. So
Yes,
have been
correct.
the funds. And so if I'm a fund who's sitting on this, I have friends that work at the Wall Street, and I had this conversation with them. They've been sitting on the sideline. Bear market rally, we ain't touching this. There's something called commercial hedge funds. They jumped in. We saw massive call sweeps. I'll give you the first one that I saw. It was 165 call sweep for Apple that came for August 19th. I thought they were out of their mind. This is when Apple was 140. Big call sweep, right? They are in. Now funds are watching in. Things are going up. Now funds are down, but S&P is moving up, retracing back 14%, right? So what do funds have to do is get back in, hence we're getting the rally. The biggest piece that Tim really pointed out that most people aren't talking about, there's only 1 or 2, 3 companies that are holding the market up. Tesla, Apple. When that happens, listen back to any of the hedge fund guys. They said the worst part of when a market's about to drop is when 2 or 3 names are holding the market, because the moment they turn, the market turns. That's one key point. Second key point is there's a $90 billion quantitative tightening happening next month. And that is going to do things that people aren't expecting because we're no longer hedged, which is a good example. Go look at VIX. It's sitting at 22, 23. So that tells you there's no hedges, meaning that control selling is not going to happen anymore. You're going to see like an overnight 200-300 point drop, which is going to take everyone out off sides. And this isn't, again, you don't need to listen to me or Mark. You just need to look at facts. I'm not saying I think this is going to happen because it's going to benefit me. One thing good traders don't have is position bias. Because the moment you get into that position bias, because I own stocks, the market should go up. Because I'm holding puts, that kind of clouds your judgment. I'm talking to you unbiased. These are the things. Now, okay, let's say the market goes up. There's only one reason for it to go up. If the Fed pivots today. If the Fed says, we back you up, inflation's controlled. Inflation's not controlled, man. They want to bring it down to 2%. We're nowhere near 10%. We're way high. So they're stuck in a box. It's not like they're not trying to. They can't do anything. So again, you need to look at the back end version of what's happening. Again, Mark, you said an important point. Like, you might be pissed off at us. We said Tesla go to 550 and it's at 900. No, man, I'm not. I don't apologize for that shit. That's part of the game. I have a plan. My plan is, your plan is 550, I buy. If it doesn't hit 550, I don't buy. And that's why you have to make your own plan. You cannot ever base anyone else's plan on your own risk tolerance. That's why, like, a lot of people lose because the marketing is follow my system, make $1 million. Along the line, your system cannot be replicated because the risk tolerance for that other person is so different. We don't even know what kind of trader they are. So how the hell are you supposed to follow someone's system? But yeah, that's my take on this.
Yeah, 100%. I agree with you 100% what you said there. And plus, like, again, I'm not seeing anything on the economic side that's pointing it to the upside. We're still dealing with inflation, regardless if you want to rename it or what. Recession is here. Again, I work for the government, and there's some stuff that I think can also change the outlook of our economy here soon. So we'll see. Things are still playing out. It's just too much tension in Ukraine, too much tension in China. There's some stuff that China's been doing for the past 2 years that I question and wondering, like, why are they doing this? I am very, very nervous. If you look at almost every single company, some of the stuff is not even making sense. Even earnings, like, the earnings aren't even great. They're nothing to be like spectacular about most of these earnings, but they're still flying up. I mean, look at Robinhood, one of the worst stocks out there, is up. It went up 10% today. You look at Coinbase, is up 20%. They're laying off people left and right. And I understand that when you lay off people, you're minimizing your costs and et cetera. But still, like, it's just crazy. There's no real good news that I'm seeing to the point where I'm like, yeah, let's skyrocket to the sky. I think this is a trap. It makes me feel real uncomfortable. I'm not really going heavy on buying right now. And unfortunately, if I missed the bottom and it does end up skyrocketing and we're completely wrong, it is what it is. I'll buy on the uptrend up. So
yeah,
we'll see from there.
If you don't mind, I don't think I'd just like to chime in on that. Like Dustin always say, you don't want to be that guy that buys on the first pop. You don't want to be the one that buy on the first pop, right? So this just the first real pop. Everything else, like the other 3 times we popped, that wasn't a pop. Like we didn't even try to solidify a bottom. It was just a quick rally and just a typical bear market rally. That's all it was. We went down, rallied back up, got knocked down, rallied back up. And this is the first time we're trying to solidify a bottom. We're trying to carve out a bottom, right? You don't want to be the guy to buy on that first pop after carving out the bottom, right? Because it may fail. And like Mo said, only one company, Apple, is what's holding the market up right now, because Google and Microsoft, Google is a slither away from bear market territory, and Microsoft is like, I think, still down like 16-17%. That's a stone's throw away. Tesla a stone's throw away. Amazon a stone's throw away from bear market territory. Apple is the only one that's not even in correction territory no more. That's why I was saying Apple running way hotter than the other big boys. So it's like they're out of, just like I tell people on my lives every day. I say, when the Dow and the NQ doing like this, spy the baby in the middle. They don't, you seen the videos when they put the child in the middle and the mama run that way and the daddy run that way and try to see which way, spy the baby in the middle. So when the parents doing like this, spy like, I don't know which way to go. So when the big boys start doing like this, guess what the market gonna do? I don't know which way to go, right? And then until they get in tandem, until we start getting a nice broad-based rally, meaning the market, like all the sectors as a whole are moving in tandem, it's like you can't like go against the overall trend. You can't start diving in headlong saying this is the bottom. Ain't nothing wrong with scaling in if that's a part of your plan, but don't go headlong into anything right now, because you don't want to be the first guy to buy on that first pop. I don't care if we went all the way back up to all-time highs. You know what I'm saying? Wait till it comes, because the market always give you another chance. Just think about it like this, right? And Mark, you can pull up a chart and fact check me if I'm wrong. If you pull up a S&P 500, it can be the ES, the S&P, or a SPX, or the SPY. If you put it on daily, weekly, monthly candles, whatever it is, if you look at it, right, in 2022, we erased all of 2021 in the first 6 months of the year. It's like 2021 never happened. When June closed, I think we was like right around like the February lows when it closed, but it dipped below. It erased all of 2021. Like it never happened. The market will always give you another opportunity. You did not miss anything. It's ebbs and flows in the market. Am I telling the truth? What the chart say?
You're close. You're definitely close. Here's a chart. This is the monthly.
Like, what do we in June? What do we get down to in June?
In June, this is the
What's
June
the June
candle. Low? It was 37. I can't really see too well.
Just put it up under there and let's see what candle it touched. Just go to the wick disappeared. Put it to the bottom of the wick on June.
Is this the June one? Yep, this is June.
What's that green candle that is next to?
This one, yeah, it was 37.92, but that is May. That was the May candle, and this is the June candle, and the wick was 35.78-ish.
And what's that green candle? Like, go all the way over to that big green candle.
Yep, that was December 2020.
December, yeah. So it erased it. It erased all of 2021. You see what I'm saying? It went to December 20, right? Didn't it say December 20?
Yep. Yep, December 20. But yeah, November, December 20. Yep, it was
Yep,
pretty
it
much
erased
erased
all of
everything
2021.
from
And then
2021.
where did we close? Where did it close at? Like go
That
up to
day
on that month. And then what's that wick that count to go to the left? That green candle with the wick neck, the second one from the red one. No, go all the way over to where you were before. All the way to the left. All the way to the left. All the way like over there by December.
Oh, December of last year?
Over. No, way low.
Yeah,
over
right here.
There. Come back. One, yeah, right there. What is that?
That's March, February. Hold on,
okay,
January.
So we closed around March. Time like the lows, like the candles in March time, but we erased all of 2021, and then we came back and closed around. So if you would have bought in, just say if you would have bought one share of the SPY on December, in December 2020, right? You would be pretty much almost right in the same spot where you were in December 2020 at the end of June. If you would have bought it in January 2021, or I mean, if you'd have bought it in May 2021, you would have been negative. You see what I'm saying? So what I'm saying is the market always gives you opportunity. Don't feel like you're missing it because you're missing this big run up. The market is going to come back and correct itself. It's going to revert to the mean. If it don't revert to the mean, it's going to go into correction. If it don't go into correction, it's going to go into bear market territory, but it's going to correct itself. It's just about having the patience.
Yep. Don't get caught up in the FOMO. So our next segment, where we're like way over time, but thank you, Tim, for joining us. I think this is a great episode. So again, if you guys haven't done so yet, make sure you subscribe, smash that like button, and click that bell to get notified every single time we drop a video. So we're going to get to our ending segment of what's in our lunchbox. Tim, you are our guest. Please tell us what is in your lunchbox. What are you planning on, I guess, trading or buying? What's your plans right now?
Well, I only trade the SPY personally for my kids. Dollar cost average into, it's not the SPY, but it's a Vanguard. It's a Vanguard mutual fund that mimics the S&P 500. A dollar cost average for them. That's how I trade for them. I have a portfolio that I manage for my mom. It's her grandkids account, and I have a few companies in there that I buy at certain percentage of pullbacks. When I just kind of manage it through that. I don't have there's nothing off the top of my head that I can think of right now, because it's like, that's not like, I don't actively manage that. I just wait for certain pullbacks on the companies and then I buy them. But for my own personal thing, all I do is swing trade options. Right now, I'm waiting for a true retest of this rally that we're doing right now, to see if I want to scale into some more longer term positions. Right now I'm in some QQQ June. I got some QQQ 320s for June 2023 that's doing pretty good. I got some SPY 425s for SPY 4, yes, SPY 430s, SPY 430s for January 2024. They are slightly down, but I played some defense on those, and I call it playing defense instead of saying hedging. I played some defense on those, so right now those can realistically go down to 75% negative, which I won't let it happen, and I still be break even because of the defense that I played in the short term with those. And that's all I got on right now, but I'm just waiting for a nice pullback to test this rally. I got my eye on if you pull up the chart, pull up the SPY real quick for me so I can look at it. Put it on a weekly for me. Let me see. Let me put it on the weekly for me. All right, shrink it down a little bit. Let me look. Okay. If we come back down to I want us to get back down. See that little red candle at come the smallest one to the right. Yeah, right there in that area there, that see that swing high right there. I want to come back and test that swing, the red candle to the left, go the bigger red candle to the left. At the top of that there, that's a swing high right there. I want to come back and test that swing high on a weekly level and defend it well. And if we can defend that swing high right there and start pushing back up, then I'll start looking to scale into maybe some longer term calls. But if we can't defend that level right there, I'm going to wait to see if we make a new weekly low below that that low that you got down there on there. Yeah, if we can defend that area right there on a weekly level and start to push back up, then I'll scale in a little bit on some longer term on calls. But if we can't defend that, I'm just going to wait to see if we make a new low before I try to get any longer term stuff and just continue to play the short term.
Got you. Mo, you mind if I go real quick since my chart's already up?
Go ahead.
All right. So I am still looking at Shop. Now, Shop had terrible earnings. I'm up almost 30% on the stocks that I bought. I bought at 32.91. Now, I began scaling in there. I looked at the chart. I mean, it hit the demand zone perfectly. The earnings was really bad, but I actually like Shopify. I believe in the company. I'm not married to it. So again, if my sentiment changes, I will get out of it in a heartbeat. But it dropped so drastically, and I think it was a little bit of an overreaction to the point that I saw this as a great value to start scaling in, and I did at 32.91, and obviously it is up now. I will continue to purchase it after September, depending on if the market is going to continue to go up or down, but I plan on grabbing more shares as it goes down or retests, especially if you go down to like the daily chart. I don't have them plotted anymore, but I plan on buying some of the upside if it ends up getting to $51. If it can get to that area, I may start buying if it can hold that area, but we'll see. Again, I'm not very comfortable 100% right now on the way the market's acting. And then the other one I'm eyeing right now is KRBN, and this is only because of the inflation bill that they're trying to pass, because it's basically just a renamed package Green Deal. I'll talk about this in the next episode, but this is a carbon tax play. I've been eyeing this literally for over a year. It's been acting relatively well, so I have my lines plotted here where I plan on buying if it ends up retracing. It's currently at a spot I could start scaling in, but I want to see what happens this week, and then I'll scale in, and I will end up buying as it goes down, but it all depends on if the bill gets passed or not. Over to you, Mo. What's in your lunchbox?
All right. All right, before I get into it, the play is Roblox, but let me just quickly show you guys something because we're talking about it. So this is the daily chart for SPY. I'm going to add in 100 and 200. We crossed 100, and the 200 is, I think, where Tim and Mark are talking about 43, 44-ish. That's where the 200 moving average is, so it's perfect. We get above that, you know, there's no reason to be bearish after that. I agree with that. But taking that aside, in terms of what we've done in this zone, let me just keep it simple. This we have a supply somewhere around here. I'm not going to get into that now, but we've touched this level 1, 2, 3, 4, 5, 6, 7, 8 times before this, 9 actually, and we failed every single time. We are now retesting this level at the 10th time, which tells you how strong this resistance is. If we do fail this, you could see that we can start a retracement cycle, which Tim talked about. Like, there's a level that he's watching. We need some sort of news for that. There's a reason why we should drop, and probably market will figure out the reason to go up or down. We talked about Roblox last week, and it just hit me now as I was doing this. And basically, it was Mark's logic that Xbox was down because people aren't playing that many games and stuff like that. And then I saw an article today saying that the gaming overall revenue has gone down drastically because people are being forced back to work. People aren't making that much. Real estate is down, stock market's down, crypto's down. People are actually like don't have that much free time. Okay, that was kind of what the theme was. But the reason why I picked this play was I saw a $3.2 million straight sweep that came in. It's a put sweep that came for Roblox. It's an open trade, meaning it doesn't have any legs. There's no call or call to it. So this is this daily supply here. Let's make sure we mark it. It starts at 50.90 and it closed at 52. They have earning on August 1st, second
8th.
week. So
8th?
I think, yeah. Thanks,
I think it's the 8th. Yeah.
Yeah, so it's in 6 days. That could be a perfect candidate. I am in a starter position on this. When we have long, so let me tell you what the position is. The position is a $40 put for September 16th. So it's a September OPEX. I added a starter position. When we have long positions like that, I build them up. I don't go all in right away. I don't go small either. So I add in layers. So most likely this was going to be a 4-layer play where I'm going to add. So I'm not averaging down here. That's not what I'm doing, just to make it clear. The plan is to add slowly to this and basically play the earning and the earning after that. So it's a little bit of a risky play because of a couple of reasons. This can get squeezed like all the garbage stocks that Mark went over that have been up. Like I'm not calling all of them garbage, but what was Robinhood was up 11% today. That's crazy,
yeah,
right?
that went up crazy.
So that could happen, but I follow the flow, the chart, and the sentiment. The macro says gaming's gone down. Cool, check mark. The chart's telling you that the supply is near. Check mark. Flow check. So that makes this a very high probability trade for me. What's the exit plan? This breaks 52.83. So 53, I'd be out like a kite with no feelings. So that's kind of what the goal is.
Yeah, the only thing, like the last episode, we spoke about my thesis on the reason why I think it may drop, because I do have shares in Roblox. I am heavily invested in it. I am down. Luckily, it's been going up a little bit, so I'm getting close to break even. The issue is that once Activision had its earnings call, Activision ran. So now I'm honestly just confused on what my sentiment is with Roblox. To me, it's really a dice game at this point. We know that gaming's gone down. Microsoft subscriptions have gone down. So we'll see how this plays out. I know Activision did run, but it also probably has a little bit to do with the fact that Microsoft is buying it for $95 a share, I believe. So I think it's going to run to 95, but we'll see what happens. I'm probably going to get in this play with you, Mo. Most likely. Not as heavy as you, but I'm probably going to get in this play. I was waiting for it today to actually reach 50 before I get into it. So
can I show you one more thing? So what's another gaming company that you really like? Good company.
Nintendo.
What's the ticker?
It's hold on, I have it here. Give me 1 second. It's really expensive. It's
okay, so
the ticker symbol is no, man, where is it? It's like NN something. Hold on.
Why is it not showing up? Is it NTDOY?
No, I don't think that's it, man. I had a different one on my watch list. I could be wrong. I don't have shares in it, but I like Nintendo. Another one.
Let's put ATBI. That's fine. Here,
okay.
Let's look at this. So I pulled a fib on that one. So this was the high. This is the low after. So I put a Fibonacci on the retracement. This was, when was this? This was 19. I'm not going to count that. I'm looking at the drop down because of recession. Okay, so the high was 103. The retracement on this thing is 50%. So I'll repeat. So top was 103, bottom was 55. It retraced on the latest run up 50%. Let me show you Roblox. This is how you find weakness too. The run up has been only roughly 23% on this, bro. If you could find another gaming stock, I'll compare. But Roblox, this is telling you that there's not a lot of institutional investment in this. I don't even know if you know a company called Bear Cave. they actually made a bear case on Roblox, which is why this has been selling a lot. Like there's a lot of issues behind the books on Roblox on their investigating. I think people were saying that, correct me if I'm wrong, we talked about it. They were using the Roblox dollar for money laundering or something.
Yeah,
crazy.
money laundering. Yeah, that was one of the reasons why it also tanked. EA is another one. EA is another gaming company, Electronic Arts. Nintendo is weird because I don't think it is publicly traded. I have it somewhere, but it's hard to find. I forgot what the ticker symbol was on it.
EA is a beautiful company in comparison to everything else. Look at the retracement. So hold on. So this is daily. Look at this. This was the low. This was the high. It's retraced close to 70%. Your Roblox only retraced 23. Relative weakness is there for Roblox. I don't want to pump up the play and be biased because I'm in it, but factually, that's what's happening. Could I rip? Yeah, I could rip, but that's the chance I'm willing to take. Flow, chart, and macro thesis all side with the Roblox thesis, so we go for it. All right, that's it from me, Mark.
Yeah, that's all we got, man. Tim, you got anything else you want to share with the audience?
Nope. I appreciate y'all for bringing the old man on. Like I say, I'm just a simple dude from Fort Lauderdale, Florida. I don't know why anybody want to listen to me. And if y'all didn't hear me the first time when I said it, when Mo asked me, anybody that want to be a full-time trader, don't do it. Stick with your job. Get your budget together. Figure out your number you need for retirement. Start saving and investing toward that, and then live your life happily. Don't try to oversave. Don't try to find out your exact number. Save and invest for your exact number and enjoy your life. If you do decide you want to leave your job, don't try to make the stock market make you leave your job. Use the stock market to replace your income. Don't leave one job for another. I did. I turned the stock market into a job and it got stressful. Don't leave one job for another. Just invest your money, man. That's it. This ain't it. People make it look easy on IG, but they just doing it for the gram. That's it.
I appreciate you, Tim. Again, I know we went massively over time, but that's okay. Consider this a special edition. Every time we have a guest, we're not going to stick to the 30-minute format. Mo, you got anything else?
That's it, guys.
All right. Everybody, remember, subscribe, like, and of course, share this video at the end if you enjoy it. Until next time, y'all. Peace out.